we need some consistency, and we all kind of need to be on the same page of what we're looking at, including a watch list. So I think we'll just use, for the moment, the Dow Jones. It's a nice watch list. It has household names that most people would recognize, and it kind of fits into the value rotation that we see going on. And we're going to get into, what that means and how to identify if we're in a fractal rotation versus, say a sector rotation, things like that. But we have to start somewhere. So today, when we have really a lot of the market thinking we're going to do one thing and we're getting another, so I thought we could maybe introduce the tools we're going to be using and start looking through a couple of plays that we either have on or that we want to put on. On my chart at the moment is every tool that we're going to use. We're just not going to use it the way it looks right now on my chart, because I don't know about you, but this is noisy and it's nasty looking, and I really can't see the candles that well. So I wanted to start with this picture because I really think a lot of people use a chart that looks just like this. It's got a bunch of indicators all over it. It's zoomed out really far, and it's just this really noisy thing with a bunch of mixed messages in there. And we want to get rid of that, right? We want to use something else. We still want to use these tools. We just want to look at it differently. So what I'm proposing is that we use something that looks like this. Now, granted, at first, this still looks pretty nasty, but we want to go in and maximize the sell. So now we've got one set of indicators here, just the moving averages, for an example, with the volume, because we might as well have something in that lower panel. And if we want to see the next indicator, we can go to the next screen, and then the next indicator, we can go to the next screen. And that way we don't have to try to pick out the information that we're looking at. It's just already broken apart for us. This is a really handy way. We're going to be looking at my tools today, but if you want to set something up, this is a really good way to set it up for yourself, right? Just use those grids across the top. How you doing, buddy? Been a pretty good year, huh? So what we're going to be doing is using just the basic old school momentum trend and trend following approach. It's worked for 100 years. There's no reason to think that it isn't going to continue to work. It's a very simple process, and it really doesn't have a lot of ambiguity in it. It's very cut and dry, straightforward approach, and I think that a lot of new traders will appreciate that, and even the experienced traders, who get stuck sometimes in paralysis analysis trying to decide what they should do. So let's just strip it back, take it down to the beginning, and focus on very simple key things that we can do. And then you guys can take it on your own. Of course, we're going to look at names that I want to look at, but on your own, you can use these same concepts to look at anything else that you want. I will stress a note of caution that if you're going to use this on penny stock junk, things that have a broken chart, they're not going to follow normal technical analysis rules. And that's because the whole idea of technical analysis is to look at what has happened in the past and make an informed decision about what we have now and what we're going to get in the future. So we have to have this expectation that price is going to behave rationally. Most of the time, penny stocks are getting a short squeeze, or they're in some way, they're what we call event trades, right? So we don't really approach penny stocks from a technical analysis point of view. We approach them from an event point of view, that there's a reason to believe that they're going to pop, hop, run, do something, and then we take a trade in those. So at least if you are thinking about doing penny stock trades, or approaching it from that point of view, that you don't have to really lean too hard into the technical analysis on those, right? You want to lean more onto the news and into the event. I color code my moving averages. We'll just start with trend, what trend is, how we are going to define it, and then how we're going to find it and measure it. My moving averages, green for the 20, orange for the 50, purple for the 200. Those are the most classically used moving averages from trading institutions, prop firms, retail traders. Everybody uses that 50, 200, 20 thing. And as you can argue, that everybody is a pretty broad tent, but it'll do for our purposes. I got the EMAs here, although simple is still really popular. We're going to use SMA and EMA when we get into the higher levels, like the 200. But for right now, just EMAs 50 and 20. Very basic, very simple trend logic. Higher highs and higher lows until that breaks, and lower highs and lower lows until that breaks. So we can validate trend with price action. We can validate trend with moving averages. We can put those two together and validate trend with moving averages and price action combined. Then we can use the other indicators, rate of change and the MACD, to also measure the momentum within that trend. So very old school, very classic, simple things, nothing complicated. And all of these tools are on nearly any brokerage that offers tools. So, if you remember when Robinhood didn't have indicators, we couldn't say that you would have it on all brokers, because you might have a broker that just doesn't offer indicators. But if it has indicators, it probably has a MACD and it probably has a rate of change. So with the first one, price itself, we need an event, right? Just because price is going up or going down, we really need to gauge that there is an event that kicked it all off, that kind of started the process. Those are most easily identified by gaps. We just want to make sure that it's not your normal everyday run-of-the-mill gaps, that we're actually focused on an event gap. So the event could be earnings, it could be news. It doesn't have to specifically be one kind or the other, but we do need to have some kind of catalyst that we can focus on and say, okay, well, that's the start of it all. If you were to go in and study technical analysis books, they will focus on very normalized price action. And just to kind of give it an example of what that would look like, we'll just go to something that intraday is moving fast enough that we can show this in real time. So, okay, we'll just come back here. So we got a breakout in price. If my drawing tool will work, come on, you can do it. So we got a breakout in price, running up. We set a higher low. We set a higher high, higher low, higher high, higher low. And at all this time, everything is going just fine. No real issues. Then we get a lower high. Get a higher high. This is where everything starts to break down. That is where we get a validation, right? So when we take all of that back and put it into what we would want to trade, we got the same thing. We have to have a catalyst. We have to have an event, a gap, say like this gap over here on the far right. That'd be a breakdown. That's the start of the event. We need lower highs, lower lows that continue. And or if everything flips, that we have a breakout, higher highs, higher lows, and some form of conversion or validation, like this moving average crossover. This setup, with all of the moving averages in order and with price above all of the major moving averages, this is what is considered the best possible outcome. BPO, best possible outcome. There's a lot of different acronyms for it, but it'll do, right? Price above the 200, moving average 20 above moving average 50, 50 is above the 200. That right there, it doesn't get any better than that. So if you're looking around at things that you want to trade, things that you think might fit the criteria as something tradable that you want to focus on, look at something as simple as that and just ask yourself, is it healthy? Is it already doing something good? Or am I bottom fishing? And there's nothing wrong with bottom fishing. Just realize, that you're not messing with something that's in an established trend. You are instead doing the opposite. We're going to just detach that so I don't have to keep coming back to this page. All right, so if we take something like Apple, since we just got the whole list here and we can pretty much run down the list, is it tradable? Do we have a signal to trade today? If we don't have a trade now, what will be the next signal for a trade? That's the things we're going to go through, and we don't want to spend a ton of time, right? Because you wouldn't, if you were looking for a trade today, you're going through this list, you wouldn't spend, an hour on every one of these names, because we're just looking to get in, get a nice move, get right back out again. So with Apple, what do we got? We're above the 200. We're above both of the slower moving average, the lower moving averages, not slower, but it's not quite the picture perfect standard of health because the 20 is under the 50. Having said that, everything else is fine. And we have the catalyst. We have the gap up today. So all of that's a good start. We're also pressing against the high of the day. If we were to use OCR analysis, we've got our high, be like the first new high, right? After that, pivot to the downside. So we've turned the corner. We've started moving up. We got our first higher high, our first higher low. And right now, although it isn't defined yet because we have to pull back, we will get a second higher high. And we've crossed through two major areas of resistance, the 50 and the 20. This is the picture of health. We do have one area of concern, and that is this massive gap here that needs to be resolved. So we're inside that channel right now. That low has to hold. So it'll make a perfect level for any sort of stop or a line in the sand that says we're wrong. This needs to hold above 185.50. No reason to worry about those 2 pennies. That's a nice clean line in the sand. If it gets below that number, any long idea has to be thrown out the window at that point, right? That it's no longer a viable trade, because if it's strong and healthy, why the heck did it fall back down there, right? So just to be fair with it, we want a clear line in the sand. Where am I wrong? If it falls below that line, I'm wrong. Now we can feather our exits, so that doesn't have to be the final law when it comes to where we're going to get out if we're wrong. We've got the low of today, and then we've got the gap close. You have to consider, if we get all the way down to that gap close and then we go down below that, that we are absolutely beyond the shadow of a doubt wrong, and we want to get out of this trade. So now you've got multiple levels to make a decision about how to manage any long trade that we're going to talk about in Apple. This is the darling of Wall Street. It is one of the 3 top traded names, and it's in nearly everybody's portfolio, whether you know it or not. It's in your 401k. It's in your company provided 401k. You're holding on to some part of Apple if you have any sort of long-term portfolio, especially a retirement account. So what's our play here? Okay, well, with Apple, we know we're getting the breakout. We've got the catalyst. We've got the gap. We've looked at the moving averages. So we want to flip it over and look at the rate of change. And we're evaluating this for any signal of divergence. There wasn't much of a signal here on that pullback. So if we were looking for a divergence, that would be one. Just the lack of a pullback here at all was crazy bullish. Otherwise, we're nearly back up to the same high. In fact, we're past that level. If we're looking at rate of change, we would be looking at this peak or this pivot here, and price has not come back to that level, but the rate of change is already there and already past it. We're getting a lot closer to this level, to year-to-date high, 198.23. So we've got this bullish divergence in the rate of change. That's in our favor if we're looking at any long plays. We've got a MACD cross up. So we're still in a primary downtrend because we're underneath the 0 line, but the secondary trend is bullish. And trends start from the lowest time frame and then they build higher, right? You can spot the trend change as low as your 1 minute chart, but you won't validate it until it gets into the higher time frames. So here we are on a daily, we're getting that cross up, but the trend really started to turn a long time ago, right? Back at the third expiration of the month, 8/18. So from all the way back there, we've been working on this move up. The MACD is just now really starting to register it. But if we were looking for a definitive mark against this trade, this would be it right here. That we're not in an established primary and secondary trend because these signals are still below the 0 line. However, you got to think about it from a trader's point of view. Are we really going to wait for this to get all the way back above the 0 line before we take this trade? I mean, we can, especially if we were going to hold it for, say, the next year, 2, 3 years, then sure, that would be a really good thing, because then you can focus on, these very high confirmation trades. But there's a phrase in the trading market, right, that says you pay for confirmation. That is so true, right? So if you think about how much you have to pay to get this confirmation, look at what happened way back here in January. We had the crossover start at the first of the year, and yet this thing really didn't get going until halfway through the year. We gave away 2 weeks just waiting for that confirmation. And along the way, Apple made some pretty good moves in 2 weeks. But all of this move from earnings, we'll just take it from earnings, all the way up to here was done after it finally confirmed. So what did we miss? We missed just this much by waiting on a confirmation. So if you're looking at this now saying, well, I don't want to wait, it looks crazy bullish, I want to get in it now. Okay, I mean, you know, hey, I'm on your side on that. But there was all of this time right here where it just didn't do anything. And if you're going to trade in options, you have to be concerned about that right there. It looked crazy bullish, and then it stalled out, and it stayed there for almost 2 months. And it came into a level of resistance when it did it. We've got this really big level of resistance, and sure, it looks crazy bullish, but we're coming right into that level. And if you're going to do this with options, you really got to consider if we're going to have the momentum to make it through that 195 area, get above 200 and continue to go in one shot. Or if it's going to be more like what we had back here, where we got up there and we stalled for, nearly 2 months before we finally started to take off. So the rules can be negotiated by you as much as you want. It's your money. You make decisions how you want. But the rules are clear. If we want confirmation, that has to get above 0. And then we've got the 310. This is basically a shortened version of the MACD. It just uses smaller moving averages, right? So it has less lag. But make no mistake about it, all of these tools have lag. And that's okay. Trends last for a long time. Weeks, months, years. The fact that this thing is lagging a little bit has no impact on us if we're looking at a trade for 6 or 9 months, right? It would only really impact us if we were looking at a trade, say, for the next 3 days. We would want something a lot closer than this. When it comes to this, we're still underneath the 0 line with one of these signals, but the other one is fine. We're already above the 0 line. What we want to really watch for when it comes to the 310 is divergence. If we're looking for divergence, we've got it. Look at the peak back here, right before the drop, right before earnings in Apple. We were sitting at around 197. We had this high here on the 310, and we have really gone past that level here in the oscillator, right, in the tool. But we haven't gone that far in price. So price is really lagging behind this thing. Normally, we would be looking for a more common divergence, right? Like here when we were still getting higher highs in price, and yet we were getting lower lows in the oscillator right before the breakdown. On this move up, we don't really have a lot yet. The oscillator barely responded at all, right? We had this divergence here, lower lows in price, and yet we had higher lows in the indicator. So it was bullish back there. It's still bullish now. That's the best we can give it, right? That the momentum is bullish. Yay, the momentum is strong, and there's bullish divergence. Apple's not expected to stop in this move until it gets back up into that 195 range. So as a trader, you've got the momentum, you got the trend, you got the target, and you know where the consolidation zone is. Lots of ways we can play this. Sell calls around 200. We can use those short calls to buy some calls in the shorter duration. We can sell some puts. We can do all of the above. It's not a bad way to go. It all comes down to, oh, and we can just buy the stock, right? We can always just buy the stock. So that's what we have on the table for Apple. Bullish into 195 to 200. Risk at 190 because we got to get that gap closed and actually make it through there. If we get through that 190 risk, then we got a clear shot to 195, 198. Everything that we went through validates that. So if we come out to the weekly, just to look a little farther down the road, we can see we've got a TRB and we have what they call a scoop pattern here. We're above the 50 week, we're above the 10 week, and we've got clear skies up into at least that 192.50, which is a quarterly and a monthly level. It's a really big deal. If we were to, turn on pivot points, I don't have mine up there on this platform. It's on another platform, but there is a major level up there, right? So 192.5 from the weekly point of view is the next area that we've got any consideration for a threat. We've got momentum, we've got short duration trend, and we've got our targets and our levels. If we look at the rate of change on the weekly, we held above 0 through this entire move. Basically, once we got above it in 2023, we haven't been back down below it, even in that pullback that we got. Now, since that is the only pullback we have, we don't know if there's going to be lower lows and lower highs yet. How the current drive upward closes is going to give us that lower high or not, right? So this has to continue to go up. If it prints a lower high and we start getting lower moves here, that's going to change everything. But until we get something like that, we don't have it, right? We just got to play what we have. And looking at the 310 on the weekly, same thing. We don't have a confirmed signal here for the greater picture, the greater time frame. Since 2023, we held that all the way up to earnings. We stayed above it. Everything was doing fine. Then we had that earnings. We dropped down. Now it's trying to recover, but it needs to recover. If we were going to do some longer term trade, we don't have a signal yet. And here is just the naked chart, because a lot of times we get a lot more insight if we turn off all that noise and we just look at what we got. Gaps, candle patterns, they're a lot easier to see when there's just nothing here, right? So I always like to have that naked chart that I can go to. And we got to play with a correlated market, right? So we're going to just go down the list on the Dow. But keep in mind, when we come across any other FANG name, the FANG, the whole Magnificent Seven group, we got to look at them in context of what Apple is doing. Apple, Google, Tesla, the whole list of them, right? We can't treat them individually. So on a question with the MACD, Let's go back to where we had a MACD. $10.12. So we're looking at last year, all the way back here. Yeah, we didn't have everything. We only had a MACD cross. But if we look at price, we didn't have a confirmation in price. So it wouldn't have been considered a loser because it never would have been taken in the first place, right? If we zoom the chart out a little bit, remember, we don't want to use these tools in isolation. So if we look at last year where there was a crossover at 10.12, make sure I have the right here. Yeah, it's back here. Here's our 10.12 cross up, but look at price action. We were still getting price that was underneath this pivot point. We hadn't even made it through that yet. So just because the MACD crossed up, that's not enough by itself, right? We can look at that and say, hey, this is looking pretty good. That reversal off of the lows is looking good. But if we're looking for confirmation with all of our signals, we don't have it, right? That didn't set new highs. It didn't make it through that pivot point. We could also look at if there was divergences too. I don't see any, but well, yeah, you know what? We do have a divergence here. So we have this high, we have that high. Price made a lower low, and this made a higher low. So there was a divergence there. And there was a significant level of divergence back here. But that's about all we have, right? So we wouldn't want to use that crossover all by itself and think that we had a change in anything, bigger picture. Now, again, you can take all of these into a smaller time frame. You can take all of the rules and adapt them, right? If you go through and read technical analysis books, they'll break down every one of these tools, except for maybe my weekly expected move. I don't think you're going to find that in the textbooks. But they'll have these regular things, moving averages, rate of change, MACD, and all of those old school books that have been around forever tell the same story, that one signal by itself isn't enough, and that if we can stack confluence, we have more opportunity to be successful. I gotta say it that way. It's not guaranteed for sure. And it will feel like you're going to miss all of it waiting on these signals. But usually the established trends that have been around forever and ever, when you look back at how they started, they all started with these really clean, solid signals that had every part along the way measured and marked where it was supposed to be measured and marked. So if you change the rules to get in early, to get the low risk entry, to do anything that modifies it, you can absolutely do that. You just want to be very strict and really clear with your rules, whatever your new rules are going to be. That way you don't deviate from them and break your own rules. So we got CRM here. If we were to start over onto a new one, we're back above the 50. We're back above the 20. Both of those are above the 200. We're coming out of this head and shoulders, inverse head and shoulders. And yes, I get it. That's an ugly, kind of a nasty head and shoulders. You can almost not see it, right? And the cleaner the pattern, the better. That's always true. But they've proven, when it comes to the chicken and the egg, that the pattern will form whether we see it or not, and it will follow through whether we see it or not. So it doesn't matter that it's ugly. Although, to be fair, it will get traded more if more people can see that it's a head and shoulders. So CRM, it's bullish, but we're still stuck in this box. And the box that I drew here very quickly, there's no magic to it, right? I just chose this last breakdown and I snapped my box there. I could have just as easily kept it at this breakdown up here, or the breakdown before that one, right? We can go back as far as we want to. So, there's nothing special about where I drew it. We're just trying to identify, hey, where's the last gap at that I need to be concerned with? 216, it's right up there. And of course, we can just narrow that up. We're in that channel. Apple had a channel too, right? We discussed the same thing in Apple. It had a channel gap, just like this one. And it was above the 50 and the 20, just like this one. It's also above the 200, just like this one. We're going to find a lot of these names in the Dow all have this same similar look. So we've got an inverse head and shoulders. That's bullish. It's also a rectangle by itself down here. So we can measure that rectangle, put on some targets. We got gaps to close. So those gives us targets as well. And the bigger picture play, asking the question, are we bullish here or not? The difference between this and Apple is, where's our big bullish gap up this morning? Remember, Apple had that. This doesn't. So we don't have a catalyst here like we did in Apple. Just to kind of remind you of what Apple looked like when we were there a moment ago. You see that very large gap up this morning, signifying that bullish catalyst that we're looking for. And it's still open, right? That gap still exists even right now while we're talking, but CRM doesn't have that. So even in a short-term duration, we don't have this bullish catalyst. Do we have to have it? No. But if we're going to do short-term trades, then we want to have it, right? Short-term trades, especially in options, if you're going to buy an option, you better have some movement, right? You really want to get an options trade that's going to get up and go. You don't want that lingering junk that's just going to chop around. And man, CRM has been chopping around. So we're past the earnings. If I can get to it, there it is. We will be past the earnings tonight at the end of the close. So CRM is on that list. I don't know. You guys want to do an earnings trade? I don't. We used to do these a lot. We'd do an earnings trade. I like earnings. Yeah, I take requests. If you've got names that you guys want to look at, by all means, hey, hit me up. One of my goals today is to get you guys familiar with the tools that we want to use so that when we're streaming through the week, and we're going to be doing these, 2 or 3 times a week, that you guys are familiar with the tools. So I can use those tools on any name you have as much as any name I have. CRM reports, here's my earnings chart. There's nothing in here that's proprietary or secret or anything like that. So if you want it, I don't care. You can have it. We've got the quarters across the top. We're looking at 2 years, so 8 quarters. It has beat 7 times, missed once, and it has a pre-earnings 21-day ramp of minus $3.50. So the ramp is usually negative. Post earnings is minus 4%. And out of all of these 7 beats, it still had negative moves afterwards. So not good for CRM earnings, right? That's the play. One thing that stands out to me as soon as I got onto this chart is these really great volatility crushes after it reported earnings and how low we are today. Look at that low implied volatility for earnings today. Those options are relatively cheap for this earnings compared to some of the earnings that it's seen lately. Last earnings, we had this bullish push, but usually it's selling off. We can see how the chart just turns this lighter color where it wasn't necessarily burning down to the ground, but it wasn't looking good. And even though it had that nice run, it still went negative after earnings on the last one. If we were going to play this, we'd want to have an idea of the trade, how far it could go, and then whether or not we think we can play that edge. So for CRM earnings, we want to use what's in the front. I'll just scoot this over so these numbers are close together. This has a $12.90 expected move for earnings. And then we take and add this other $12.32. So that's 24, 25, call it $25.50 higher or lower? Is there any edge in that for us? We're at 215. That puts us at 240 to the upside. It's all the way up here. It's 35 cents. I mean, that's not bad. If you wanted to try to do an earnings trade lottery ticket on CRM, you're looking at buying calls for about 35 cents each. If you're wrong, that's your max loss. Because I promise you, if their earnings are bad, you won't get $1 of that $36 back. It will lose all of that in a heartbeat, probably before they even open tomorrow. But if we're right, that thing can monetize and turn into a $600 option by the end of the week. That's not bad to risk $36 to make $600. That's a nice risk to reward. What is that, 200 and something percent? All right, so let's flip that over and go the other direction from 215 minus, what did I say, $35, $25? That puts us down to 190-ish. So for the puts, they're just a little more expensive. You're looking at about $39 for a put. So there's your earnings trade if you want to do CRM earnings. There's no reason to get complicated and try to do some, iron condor kind of thing, because all that's going to do is really increase your risk. It's really not going to offer you a lot of love. Plus, this thing's got a history of breaking. So cool. All right. Sure. Here you go. I'm just going to post that into the Zoom chat. You should be able to copy that link and then go to your ThinkorSwim where it says setup, open shared item, post that link using your hotkeys, and you'll be good to go. All right, so rather than going through this entire Dow list, which, I mean, if we have the time, there's nothing wrong with it. Let's try to find one that really has got a good signal to it. I mean, it's kind of hard to argue with that one, isn't it? All right, the only thing we're missing here on Caterpillar is the price signal. We don't have the catalyst, but we do have the fan. So 200 on the bottom, 50 in the middle, 20 on the top, price above all of those. The rate of change is below 0, so that's a little bit of a negative. And we've got, at the moment, a serious divergence, right? So Caterpillar is actually signaling a short here, but that's a contrarian play. There's no reason to buck the trend, so to speak. Let's just leave this one alone. It looked good at first, but really quickly found out that, maybe we don't want to mess with that one, right? So let's leave that one alone. The divergence in that rate of change is too strong to ignore, and we just don't want to take that threat. For a short-term trade, if you wanted to just ignore all of the longer-term stuff and take a trade, if it breaks back inside of yesterday's price, you've got a short back to the 20. And if it breaks above today's high, you've got a long up to 290. So there's a nice short-term trade, but that's not really what we're hunting for, right? All right, Walmart. We have a catalyst, and even though that gap is filled, it's okay because the gap is there, and we're already back above the open. So we opened gapped up at 160. We fell all the way down here, and then we ran all the way back up. So that's pretty good. The number one thing that stands out to me right here is this unfinished business. So there was a lot of traders who got caught by surprise back here on this big bar, and they're taking advantage of it today to get out, right? So you got to imagine everybody that got stuck here as longs held on as bag holders through all that trash, and today they're taking a chance to get out. So until they're done selling, We don't want to try to take a trade here. We have to get above that and close, right? We have to. Until then, the other things that we have are all in play. We got the gap. We've got bullish divergence. Is that right? Yep. We got bullish divergence in the rate of change. We just have to get through that unfinished business there. We're outside the weekly expected move, so it implies that we're exceeding market expectations. Everything is there. The momentum, the trend, everything except that breakover. So let's get above that red bar, then we can talk. Yeah, even the 310 is showing bullish divergence. All right, that brings us into Visa. All right, Visa's been a theta decay killer since June. This thing has done nothing for nothing, right? But in all of that, I don't know if you can see it right away, but we've been trending higher through that whole thing, right? Grinding higher is a better word for it. Not really much of a trend, huh? Still, the angle of the moving averages has a lot of information in it. So the fact that they're not flat is a good start. You want them at about 3 o'clock or 2 o'clock. Not 3 o'clock, excuse me. You want them at about 2 o'clock. If you think about, the hands on a clock. So we're just starting to turn up in the 20. I know the 50 is not quite there yet, but we're above all three the way we're supposed to be. We've got price above all of them, and they're stacked appropriately. We got the breakout level today. We got the gap. So we got the catalyst, the momentum, the trend. And we've got bullish divergence in the rate of change. Okay, so we've got every single thing in Visa. Even the consolidation itself is bullish, right? Because during all of that consolidation, we were building up energy and we were grinding higher through all of that. If I was to use, something like the RSI Laguerre, which is not going to be found in all of those old school books, this would show that we built up energy in that. But I'm trying to stick with tools that I know you can find in any established textbook, right? I don't want to throw complex tools at you guys that we can't validate through 30 years or 50 years of market history. So Visa's looking really good. Let's just keep moving through all the other tools until we're through with all of them. All right, we had bearish divergence here. Price set a higher high. The MACD set a lower high. So that's not good. And so far, we haven't pulled back down again. So we don't know if we're going to get a higher high that matches or not. Very likely we will. But when this set that first low and then gave us a higher low here, the MACD gave us a lower low. So that was bearish. Everything did turn. The MACD is starting to get on board. We are still holding above the zero. It matches with the breakout. And we've got primary and secondary trend both bullish on the MACD with increasing momentum. And we have the catalyst for the breakout. The 310 oscillator also bullish. And look how there's no divergence on this 310 like there was in the rate of change. We've got the low here, the deeper low, and then we've got the more shallow, higher low, same as we do here. And we have the lower high, just like we do between that high and that high. So no divergence in the 310 oscillator. This is just straight up bullish. Every signal is there. It's not going to feel good though, trying to get in when it's falling like it is today, but this says it's not done. Take it out to the weekly. It is falling back a little bit. We got some wick across the top, but that bullish picture exists here much stronger. We can see the distance from the 10-week, the distance from the 50-week, the continuation of the move off of this low all the way back at 227. and we went to 247 and it's not done. It's looking good. That's a lot of consolidation, right? So the expectation is this is now finally going to get up and go, just like if we looked back here at all of that consolidation, right? It spent some time chopping around, and then it finally got the heck out of Dodge. So that's what we're looking at here, right? We can see the rate of change on the weekly. Looks really good. 310 oscillator on the weekly. It's held through this whole move, staying above the 20, the 10 on the week. Looks great. And here with just nothing on it but pure price and a little bit of volume down here, that's the only concern, right? Is that we've got a major breakout. Every signal we would want, the volume's a little light. If we use just a very simplistic volume analysis, what they use at IBD, Investors Business Daily, they say today's volume, since it's a breakout bar, it has to be better than yesterday's volume. I mean, that's a simple metric, right? At the end of the day, we can look at the volume and see if it's greater than it was yesterday. If it is, then it meets that qualification. But the problem is we have to wait until the end of the day to get that qualification. But volume analysis is usually where a lot of new traders get stuck. And using that simple tool, is it higher than yesterday? Okay, that's a breakout with higher volume. I know it sounds really simple, and there's more complex, better tools out there, but you know, that's not a bad way to go. So on this breakout, you could wait for a retest, right? The idea when it comes to something like this is, are we in an established trend? Will that trend last for a while? Is there actually enough here to chew on, right? Enough meat on the bone. Now, whether or not you cook this steak until it's done, or you get into this, while it's still medium rare, that's really a personal preference. Should you wait for a retest of that low? I mean, you can. Do you need to? No. A good rule of thumb, look at how many bars we've gone up in a row. We had 3 bars, and actually that third one, it didn't look that great, right? It barely got back up to the close of the second bar. So really the third day was nothing more than a better close of the second day. And then we had this massive gap up. It's very likely going to pull back now. But all of these tools say that the trade here is long. How do we get into this long trade? We can just straight up buy a call. But again, like we just said, it's very likely going to pull back a little bit. It's going to digest this move from all the way down here from 240 to 248 in 4 days. The call is going to lose a lot of theta, and it's going to lose a lot more of its IV. If it hasn't gotten totally IV crushed yet, it's going to get the rest of it crushed out. We could use a spread that'll eliminate the Greek's decay, make it more of a neutral trade. Once we get the spread, it's almost like stock at that point, right? It's still going to have a little decay, don't get me wrong, but it won't be so punished so brutally. We could sell calls. Even though we're bullish in this, we are bullish with an expectation that we're going to digest this move a little bit. Still, we're in an established trend, and our targets to the upside, just measuring the range that we have here, gives us 250 and 255. So we could price some calls at 255, 257.5, try to sell those, use the money from those short calls to finance the long call. That way, if the long call kind of stalls out, we don't really lose any money. We just lose the credit we collected. We could sell some puts at the money. It's not really a good idea though, because we are anticipating a little bit of pullback, and we can just straight up buy the stock. Now, IBD, when it talks about breakouts like this, they're pretty comfortable with a range. So IBD will look at something like this and give it a 2% range across the top. And they'll say that that 2% range is your buy zone. And as long as it's in that buy zone, you're good to buy. and they don't really focus on, you know, waiting for the pullback or whatever. 2% is actually all the way up here at 249. So as long as this is not higher than 249, you're in that buy zone. And at that point, it just comes down to, are you willing to sit in here and wait it out or not? These tools are telling you that we're in an established trend, that the momentum is there, and that we have a gap. Now that gap is a concern because it could be an exhaustion gap. And if it is an exhaustion gap, then this is going to fade back down and it's going to, you know, settle on that support. There's no perfect metric to try to identify if it's an exhaustion gap or not. But if you want to learn more about those gaps, now that you know that there is one called an exhaustion gap, put that in your list for something to search. I promise you, there was videos on it, webinars. TD Ameritrade did one a while back on exhaustion gaps. I think it was by Ken, but it might be James. Either one. It wasn't Barbara or one of the other girls. So Visa looks good for a long. Intel, old school technology, right? Not the new tech names that are all hot and fire flames, but old school tech. No gap. In fact, we're just lucky to even be holding this breakout of yesterday's price action. But we are above the 20 and the 50 and the 200, and 20 is above the 50. So when we talk about the, you know, the best possible look, that's what it's called, the best possible outcome, best possible look. It doesn't get any better than that. So from the moving averages point of view, we're good. Rate of change below 0, that's not that hot. No divergence yet. If we're looking at the high set here and the high that we have here, we got the same in the rate of change, so no divergence. Got an inside week breakout. So it's moving farther than market expectations. Got a MACD crossover started yet, but it's not confirmed. It's got to get back above 0. And we got a 310 oscillator breakout with divergence. So this is giving us a bullish divergence signal here. We have a high set back here. We have a high here. The MACD is showing a higher high. And since we haven't pulled back yet, this has to actually fall down to make this a higher high or a lower high or some kind of high, right? Until that falls back, we don't have a higher high. We just have a market moving up. So that's not confirmed yet. But so far, I would say this is going to end up being divergence. Bullish divergence for us. All right, weekly, we're above the 10, we're above the 50. We got the breakout started. This is a TRB setup. You're not going to find a TRB in the textbooks, though. I'm the one that gave that name to this pattern just because I love the setup, whatever we call it. I believe it's similar to Cahold, but mine has more characteristics to it. That's CAHOLD, Cahold. You can look that up on TD Ameritrade too. They've got a lot of webinars on Cahold. It's a great pattern. In fact, Barbara will teach you how to build the candle pattern. All right, so ThinkorSwim will actually do candle pattern recognition, and you can teach it your own patterns and it'll hunt for it for you. So if you go to TD Ameritrade on YouTube and you type in Cahold, CAHOLD, Barbara will show you how to build these and then different versions of it, and you can use that to scan. Candle at the high of the lowest day, CAHOL, something like that, right? All we got right now is that we had a base being built and we've started the breakout, and our targets in this are back to 37 eventually. Let's get to 35 first, then we'll get to 36, and then we'll get to 37. I know that might sound a little simplistic, but that's the progression. So when it comes to distance from moving averages, the moving averages that you're going to use are really important. So especially if you're going to use, are we too far from a moving average? Which ones are important? When it comes to the 200, the greater the distance, the better, actually. There's a lot of analysis on the NASDAQ, for an example, that says the farther the NASDAQ gets from the 200, the better the trade, which is awesome, right? But when it comes to something like the 10-week, I'm a big fan of not getting too far away from the 10-week. So when we do, I start looking for pullbacks. Remember, retracements are our friend, right? So with all of these, if you think that they've gone too far and you don't want to trade them today, now, that's perfect. That means you're waiting on a pullback, a retracement, to get into this thing that we've already identified as being bullish and ready to go, right? So on any of these today, once we've identified it as a long candidate that meets all of the criteria, all you have to find is that pullback that you want for your own entry. I'm not telling you how to cook the steak, right? In other streams that we're going to do, because today's just day one where we're going through these tools so that we're all on the same page, I want the Bullish Bears back to how it was, where we were doing swing trade webinars 2 or 3 times a week, looking at trades, building trades, putting trades on. I want to get back to that. We got to start somewhere, right? We got to all be on the same page of what we're going to use. So that's kind of what today is. So later on, we're going to definitely be putting trades on, and I will be using my own levels. We'll be focused on pullbacks and all of that. If we find one going down through this list, I'm putting it on anyways, right? There's no reason to wait. If I find what I'm looking for, I'm putting it on. All right, Home Depot. Not much of a catalyst here. It actually gapped down, ran up, broke out. We've got the best possible stack, 20, 50, 200. We're above all of them. We just have this lower high that we got to deal with. Right now, to be fair, we really only have the lower low here. We had a low set here, and we have a lower low set there. But we don't yet have a lower high because this upward drive isn't done yet. Until we pull back from that, we don't know it's going to be a lower high. But the fact that we got a lower low, nah, that's textbook. Okay, so if you were to go look at what is trend 101, there's 2 ways to see a trend change and go to the downside. One of those is when you get a lower high and then you get a lower low, then you get another lower high and you break that first lower low. That is a textbook example, but this is a different one. So here we had a low and now we've got a lower low, but we still don't yet have this. For a confirmed short, we would have to break that low, that 322, get below the 50, get below that. We'd have to do that for a confirmed short. For a confirmed long, we'd actually have to go all the way back up here. That's a long wait, right? But just like we talked about in Apple, waiting for that to set up correctly can get you into a trade that lasts 6 months. So, we can cheat the curve and get into things that don't necessarily match all of our criteria. But when we do that, we stand the risk, right? So we got IBM, another old school tech, best possible outcome, 50, 20, and the 200, price above all of them. Nice stack, good angle. This is a good start, and we've got our breakout. The only thing we're missing here is the catalyst. Okay, so far out of all of these, this is the first one that's given us nearly everything. Well, shoot. And look at that. Massive divergence in the rate of change. Now, that's one signal that is screaming caution out of everything that we've got so far. we've got a divergence in the MACD as well. It hasn't printed this higher high yet, but to be fair, this isn't a higher high yet, right? It still needs to pull back, although we've gone up there now, so it will be, even by minor standards, it will be a higher high. Still, we're not getting it confirmed in the MACD. So IBM is throwing serious divergence signals, really serious divergence signals. This is screaming short, right? As bullish as this looks, IBM's a short. Now, it's not a valid short until we break this low, right? So now we've got a long wait ahead of us. The thing is, we've already did all the work. So we just set an alert because I want to know when we cross that. You can do that on the Discord too, by the way. Just type in alert, use \alert. Show you what that looks like. When you use the \, you get all of these bots. Type the letter A because we know alert starts with A, and then kind of weed through the alerts again, or weed through the menu that pops up. That's the one we want right there. Alerts create. Click on it. IBM. Equal or below. And 140. IBM 140. Yes. Hit enter. It'll confirm. Yes. Yes. Okay. There you go. Now that only works for me. So if you want an alert there as well, you got to do what I just did to get your own alert. You don't have to. The broker will do it, right? But it's kind of nice to have. If you're already using Discord for alerts, might as well put your alert there. So I don't like this for a long trade. I'm sure there could be a little something in here for like a short-term trade, but this sucker looks like it wants to go down. So how could we trade it now rather than waiting? One thing that we could do is sell calls. I know people like that out of the money stuff, but I don't. If I was going to sell calls here, I would do it right at the money, right where it is. We're not looking for a long-term thing because once we break 140, we would change the trade anyways. So something between the October 6th and the October 20. I kind of like both of those. Easiest way to figure out which one we want is which one is more liquid. So we go in and look at the volume and we look at the open interest. Hands down, no doubt. Look at that interest. This has none. This has a lot. When you can see a shape of a volume profile there, it's not perfect, but that's a really good start. So that's got the volume. There's your volume profile there too, right? So that's got the volume. We would want to trade the OCT20s. You know, it's a 5-cent bid-ask spread. It's not that bad. I would do this, and it's $5 wide, so that's not cool. But look, 283 in credit. Yes, please sign me up. I'm going to go ahead and take that. IBM. Just remember where the real short isn't until we get below the 140 level, right? So I'm doing this just to, pay me for my weight. And I'm getting a really good price for it because everybody else is bullish. I'm actually getting 283 in credit, and it only owes me 250 in credit. My max risk in this trade is 218. Max profit is 283. 282, 283, depends on where I feel. I'm going to work the order. I'm going to try to get a few more pennies, get 285 out of it. See if I can get it. They're bullish, so I should get a nice price out of that. All right, so the real trade is below 140. I'm just trying to get paid for my weight. All right, that way, once we get down there and we got a confirmed breakdown, we can trade this, I don't know, say 130, maybe 125, one step at a time. All right, here's a good picture of trash. So this is CVX. We're below the 200. We're struggling at the 50 and the 20. We got nothing here. There is absolutely nothing that you would want to do with this. At the most, you could lean into maybe doing some sort of iron condor thing. And I mean, you got to love that, but that's not trend. It's not momentum. It's not what we're focused on. That doesn't make it wrong. So CVX, iron condor, maybe legging into it would be nice, but to leg into it, we got to have a bias on which side to start with. And I don't have one. American Express, nice TRB setting up, but we're under the 50 and the 200 and the 20. We're building a nice base. If we were doing some bottom fishing or something like that, that could be a play. But otherwise, we got nothing. Investors Business Daily would focus on this, and they would call it an early entry play. It's what I call a TRB. We can call it whatever we want. So the TRB is there. All we got to do is break above that 2200 mix. It would be considered an early entry. So if you're looking for confirmation and all that higher stuff, that's not it. But that'd be the play. Stay get above 162 for a long there. Procter and Gamble picture of best offer. So it's above the 20, above the 50, above the 200. We have no catalyst, no breakout gap. We don't have a price action pattern, like a higher high or anything like that. Nothing good here in this. All right, we're done with that one. We just skip it. So hopefully you're realizing if you get into the habit of this, right? That you can run through this list of names really fast. There's only 30 names in the Dow. And it's very easy to scan for a lot of this stuff so that the names that you even start to look at already have criteria like it's above the 50 and the 20 and the 200. If it isn't even above that and you use a scan, you can eliminate a lot of these names. Then it just requires a few minutes. You're looking for consistently higher high and higher low pivots with no divergence signals, and you're gold. You've got another trade setup. Yep, the IBD 50 is a great list. And there's an ETF for that too, for people that just want to, just trade the ETF. If we were looking at Microsoft for an early entry, we would still need to get above this really big day. And I'm going to argue, even though we're on a daily and we want to really see this on the weekly, but that outside red bar there where we went outside of this in both directions, that is crazy super bearish. And this whole thing is broken. The end. Now, that doesn't mean it can't change, right? But when you see that, just run. Just run away, go ignore any other indicator that you're going to get. You see that big old outsized bar like that, there's no long trade there. And as you can see, even the short didn't work. If you tried to short it after that really big down day, even that didn't work. So when you get something like that, you really just want a GTFO and leave it alone until it fixes. To fix right now, it's got to get above that last high, that 332.85, or it has to get below the other side, the 319, whatever that is down there. Now for a short play, if it can do either one of those for a short-term trade, that's all it has to do. It just has to close above or it has to close below. And you have yourself a short-term trade to 340 or back down to year-to-date lows 310. So you could set your alerts on that too. Because I like Microsoft as one of the premier Wall Street names, like the name. But that's a pretty ugly chart. All right, Travelers has bad options. So I'm still, I would fairly analyze it if it had good price too. But the options in this are horrible. You never really want to trade the options in this thing. Just stick with common stock. And right now we don't even have a trade in it anyways, so we'll just let that go. Some of these names are moving around me. Let's find something, right? Oh, I got to get that filled. Let me bump the order. IBM still hasn't filled. Probably because I tried to get that 285. All right, I bumped the order. We've got American Express. Yeah, a good one. McDonald's. Wow, I think I'm hurting ThinkorSwim here a little bit. It's starting to suffer. All right, so we got McDonald's testing that 200. We're under the 50. We're under the 20. All we got to do is get under that 200, and we've got a great short. When we look at the swings, we had this swing low back here. We had that swing high. Now we've got a lower swing low. All we got to do is break that low. That's not very far away, and it ties right in with that 280. So McDonald's is setting up for a really good short. We're looking to get back down to that 268 area. Take it over to a weekly, it kind of makes a little more sense. So here on the weekly, that real big drop down and then the rally back up. But look at all that selling pressure across the top. The pivot that we're looking for the short isn't here, just seeing that weakness is here, right? And if we're looking for the signals, we've got the lower high, the lower low in the MACD and in price, so no divergence. We certainly had divergence here with a high set in price and a low set in the rate of change. And then the low here was lower than here. And this is saying, yeah, but more, much more. So that's a shallow divergence. That was lower, but this is much lower. That's saying trade to the downside. I like it. McDonald's short. It just needs to break that trigger, whether you're going to take it on a daily or a weekly. For the daily, I mean, that pin bar that brought it back up, that's hard to argue with. I like 280 for a short. See how easy that is? All right, Johnson Johnson, short candidate. So we had a high, had a higher high in price, but a lower high in the rate of change. Low, lower low, nothing off there. Lower high, nothing off there. So, okay, that divergence is old. A couple weeks, it's not bad, but I mean, it just doesn't have as much impact. We need to get completely underneath that 200, which we have. Now we just got to go. We can count this high here from the 28th. We can, but it'd be nice if we get another try. Either way, if we break our current low, get a candle close below that low, there's our short in Johnson & Johnson. The thing is, they got this thing going on. I forget the name of the other company, but there's a merger or a takeover or something with another company. And when there's that kind of stuff going on, I'd rather just avoid the whole thing. So with Johnson & Johnson, although we do have a short, I don't want to mess with it because I know that there's a merger or a takeover or something. I just can't remember what it is. Merrick with higher highs, if we can get through that 12.5, we got a long. Just going, getting a list at this point. Where's our trades? All right, so to circle back to a question someone asked me earlier on Apple, with this, you have a high. You need a higher high, which means you got to get a higher low, right? When you have two of each, two higher highs and two higher lows, you have an established trend. If you have an established trend and you're above the 20 and the 50 and the 200, you're gold. Even though you're not back at all-time highs, you are in an established trend. So if you're looking for a play in Apple, you need it to pull back so that you get these two higher lows and you get those two higher highs. At that point, once it pulls back, you can choose to be a trader that gets in on that pullback on the retracement, or you can choose to be the trader that gets on the breakout as it goes to break the next high. And what that'll look like is just how it pulled back here, and then it ran up and it broke that previous high with a new high. That's going to be your breakout look. So you can use the old examples for how you want to do it. Either one. It'll look like that pullback. You'll be trying to get on that, or it'll look like that breakout and you'll be trying to get it on that. But after it's already made 4 green days in a row, you're probably not going to want to buy it today, right? Like, don't do it. You're probably better off waiting. Now, if you're going to hold it for a year or 2 years, I promise it won't matter if you get it today or not. But if you're just trying to take a short-term trade, it's going to matter a lot. Let it pull back and set that higher high and that higher low, right? So there was a question on the FFTY, which is Innovators IBD 50 ETF. If you want to know more about this, you can Google IBD, Investors Business Daily 50, and you'll get a nice little write-up on Google. Take a look at this and compare it to, I don't know, Apple. We were just there. 20, 50, and 200 period moving averages. It's a picture of health when it's above all three. And right now we're only above 1.5. We can't even count the 200 because we're not done with today yet. Today needs to close. We're above the 20 for sure. So when it comes to price action, we've got one higher high and one higher low. We need an established trend. So we need 2 higher highs and we need 2 higher lows. We don't have that. We don't have the moving average stack. We don't have the price stack. What about anything else that we could have? Come over to the weekly expected move. We're still inside the range, so we're not exceeding any expectations there. We look at the MACD, we're below the 0, but we're above the signal line. So primary trend is down, secondary trend is up, and momentum is beginning to increase for that upward drive. We look at the 310 oscillator. We had a low set and then the low set way back here. Price was showing lower lows. This indicator was showing higher lows. So that's bullish divergence. But since this low that was marked, the next low, this higher low, doesn't show up. So we could just look at this and say there's no divergence here. If that tiny little wrinkle there is considered the pullback, then it was a higher pullback. So it wouldn't be divergence either way. If we look left to the last pivot, here's some bullish divergence, at least in the indicator versus price. The indicator is showing a higher peak than this peak, and price is showing a much lower peak, right? So price divergence. I'd still say that this is bullish in the bigger picture, but we got to get all of these signals to line up, right? Oh, and there's the weekly. We're underneath the 10-week and the 50-week. So a lot has to change for this to be in an established trend. And here it is naked all by itself. We have a very big breakout with no volume to it. If we looked at it from yesterday's point of view, we'll just back up to the breakout day. Remember their criteria. The only thing we need is volume today being better than volume from yesterday. And it did that. We had a breakout bar yesterday on elevated volume. Check. Done. So we got the volume. It wasn't really much of a gap that day or the catalyst day, but it is there. And today's volume is better than yesterday's volume on a breakout. So again, same criteria, same checklist. So that's good. But man, you can't negotiate with this. We're still underneath the 200. We're still underneath the 50. It's got a long ways to go. And we don't even have an established price trend. So this has to pull back, set a higher low, and then run up and break that high and give us a new high. Yeah, the weekly MAs are a little different. The textbooks will mostly point you to the 20 and the 50, but I like the 20 and the 10 and their EMAs. So on this chart, I've got 20 and 10. On this chart, one of these guys, I've got the 10 and the 50. They're nearly always going to be the same thing though, right? The 20, the 50, the 200, those are your textbook classic moving averages. I just added the 10 for myself because I use the 10 so much. But nearly any textbook that you pick up on trading is going to talk about a 50, a 200, a 20 period. And, they'll argue their case for the EMA versus the SMA, but they are the classic staple. And no matter which ones you use, as long as you're using them consistently, it sticks. So if we were to, look at these from an SMA versus an EMA, as long as we have the order that it's supposed to have, we're good. And we don't. So we can use trend in price, or we can use trend in moving averages, or we can use a combination of price and moving averages. And right now, both price and the moving averages say no trend. AMGN. The 50 needs to get above the 200, which is almost destined at this point. I don't know that it could. I guess it could. If we fell out of bed tomorrow and got all the way down here, then it might not cross. But the odds of that happening are so low that this is going to cross. And once it does, we'll have the 20, 50, 200 combo that we're looking for. The problem is we've now got a higher low, and that is confirmed and it is established. Unless this market rallies in the next 70 minutes and turns that into a green day, this is our higher low, or excuse me, our lower high, which means all we got to do is break that low and we've got a confirmed short. At least it's confirmed in price, if not in moving averages. All trends start somewhere, right? That's a nice short setting up in AMGN. Just approach with caution because that was a crazy move after earnings. And this looks like it really just is digesting that earnings. When it comes to analysis, we can follow the textbook and just be blind to everything. We can. I don't agree with that, though. I mean, if you know there was an earnings that caused a move that you see, take it into consideration. You know, so this is looking a little weak, but whatever their earnings was, and I don't know, I didn't listen to it. That is an island, and until it crosses back down, it's still bullish in the bigger picture. Screw what technical analysis might say about this one. Until that breaks, I would say the moving average analysis is going to be more accurate on this one at that point. One of those is wrong. All right, so we got Boeing here. The moving averages are stacked correctly, 20, 50, 200. But price, whether we use the wick or not, is going to really matter to my next statement. But price is showing us a lower high and a lower high with a lower low and a lower low. We only need two of those to have an established trend, and that is confirming to the downside. Now, having said that, this little bitty wick right here is a higher high, but we've still got a lower low to deal with. And since we didn't close higher, I argue that we didn't have it anyways. I'm not right or wrong in this. Analysts, I've seen them do both. The thing is, you only want to do one and then make that your rule. So for me, I'm going to stick with candle close. That's what I use. As long as the candle closes lower, this is not a higher high, today's price action. So that's two, one here, one here. After today, we're going to have three because if we continue to fall down. But we actually got to go down before this is a new one, right? So two, that one, and then two here, here, and here. That's an established downtrend. The moving averages are not confirming that, though. And I get it for every argument. Oh, I don't want to wait that long. It's so far away. I want to get in now. You're looking at stuff that won't confirm for weeks. Yep, I get it. But look, it's about planning ahead. You don't want to trade what you find tradable today. What you trade today, you want to found a week ago, 2 weeks ago, and that you had time to do work. That you know the company, the CEO, the thing that they make, what their last earnings was, how they are sitting with their money. Are they going to come out with a stock split in the near future? You know, are they coming out with a new product release? Are they going to have a big event, like a investors event? If you're going to put a lot of money on the line and tie things up for the next 2 or 3 months, you want to know what's going on. So yeah, a lot of these trades aren't tradable today. Because we don't have the setup. But that doesn't mean that you can't set them up. This works really well for people who say things are moving too fast and I feel like I get left behind. By the time that I get in there, it's already made the big move and I'm left sitting on the sideline like Joe Schmo who missed their entry. This is exactly how you want to approach things. Find it in advance, so that you already know what you're looking for. Then all you got to do is all of your extra homework and then wait for it to break that level. You've got your trade. So with Boeing, it's looking pretty nasty. The moving averages don't confirm the short. Oh, I was going somewhere with that ramble. The example that I always use for people that say, well, I don't want to wait for the confirmation. If you ever feel that way, just go look at something like Apple. There's a million others that look just like this. I just use Apple because it's the most popular. And it's the 2023 crossover when everything changed and we flipped up and started running. So, you know, if you'd have took the early entry, and I went through this earlier, just kind of recapping for anybody that missed it earlier. If you'd have took the early entry, it would have worked, but you would have stayed in this chop for a while. However, if you waited until everything confirmed, meaning you had the 3 stacks and you had price on the breakout with the gap, like you had all of your signals, then from March all the way till July, you did not miss that run. What you did miss is a little bit of this run down here and a month and a half of chop. So waiting for these things to confirm might feel like you're missing the game, that it's running away without you, and that you're not getting the trade on, but you get what you're looking for, which is a good, clean, strong, healthy trend that's going to last for a while, not just a short-term trade that's going to last 3 to 5 days, maybe 7 days, and you're back out again. There's nothing wrong with those, right? I'm not against those. I'm just looking for things that's going to stick around longer term trades. Somebody who's got a day job who can still trade, they can trade this way because you don't need constant vigilance in these. You can set key levels and let them run. All right, we didn't hit every single name on this list. And I just want to touch real quick that Verizon got an upgrade today. So did AT&T, which isn't on this list. But it's part of the communications names, and communications have just been doing really good. This isn't confirmed as a good trade at all yet. Like none of the patterns, none of the signals there. It's funny that even the junk like Verizon, and it's junk, make no mistake about it. Even junk like Verizon is getting upgrades and pops to the upside. What you want to be watching over the next 6 weeks or so is the tell. What we're looking for are fund managers who miss the boat in things like Nvidia this year, and they're going to start thinking about what do they tell their clients at the end of the year, right? All those people that hired a fund manager, oh, hey, manage my money for me, and they can't even beat the S&P 500. What do we need a fund manager for if they can't beat SPY? We can just go buy SPY and not even do anything else. Those fund managers are going to start buying the junkiest junk out there just to catch anything that makes a wink of a move. I don't think we're done yet. I think we got a lot more stuff that can go. A lot of growth names are going to stall out because they've already made the move. And those value plays, even if they're bottom fishing trash value plays, are going to be the ones that run. The no name forgotten junk like Pepsi, Verizon, Coca-Cola, I think it's going to be a lot of those, which is cool for us, right? If we want to, you know, find something to trade, that's cool. We'll take that dash for trash stuff because it's usually cheaper stuff. You know, a $35 Verizon is way better than a $400 whatever, right? So it was a good day just to kind of get all on the same page of what we're looking for so that when we do these streams during the week, you already know the tools we're going to be using. 20, 50, 200, the rate of change, MACD, or the 310, which is the 310 is still, it's just a MACD, a little shorter duration MACD. We want price to confirm, which we can also moving average confirm, and then we make sure that there's no divergence and we validate or measure the strength of the momentum. That's it. Simple as that. If it doesn't meet that criteria, it doesn't mean that we can't trade, like my IBM that I'm still trying to get into. It just means that we're breaking the established rules and looking for a short-term little something, something. Okay. Yep. Yeah. I mean, those are going to be more trade related. Today was more, what are we doing related? Because if I'd have just come in here and started flipping through all the charts and you guys didn't know my tools, you'd have been as lost, right? And you wouldn't understand what I'm using for rules and criteria. After today, we'll be able to just come in, go through the charts, and I don't see any reason that we can't broaden our horizons into the S&P 100 and the NASDAQ 100 and even into the Russell. There's no name that we can't trade, especially when a lot of these are going to be stock related. We don't need the options. So that's a wrap. Hope you all have a good afternoon, and I will see you later this week. We're going to get at least one more in this week, right? I'm hoping to do it before Friday, which means probably tomorrow, but if not, we'll do it Friday. That's a nice way to end the week, is to maybe get some trades on, or we'll see how non-farm payroll comes out on Friday and how it affects the market and take a trade maybe from that. Later, everybody. And I will put this in the replay. So, if you guys had an area that you want to catch a replay on, it'll be there. Probably about an hour or two. It's got a render.